before a trader destroys their own account, before they take that single step that erases months of effort, something shifts inside the mind. It's not bad luck. It's not just the market moving against them. It's that silent, unseen instant when the trader turns into their own biggest obstacle, setting a trap without even noticing it. You might think self-sabotage happens in one reckless trade, but it doesn't. It starts the moment your mind begins to blur two different worlds, the market's reality and your personal reality. Here's what I mean. The market doesn't care about your expenses. It doesn't care if your day went wrong. It doesn't care if you've been losing all week and desperately need this one to win. But your brain cares about all that. And when the part of your brain that trades starts listening to the part that feels stress, fear, or greed, you've already lost before you even enter the trade. This is where self-sabotage lies, not in the trade itself, but in the mental state you're in when you decide to trade. Most traders think they lose because their analysis failed. They tell themselves, I should have used a tighter stop loss, or maybe I picked the wrong level. But if you dig deeper, you'll find something else. They knew the rules. They knew the risks. And yet they ignored them. That's not bad strategy. That's weak psychology. The truth is, our brains are built to escape pain and chase pleasure. And the markets are a perfect trap for both instincts. If you're hurting from a loss, your brain urges you to win it back. If you're feeling great after a win, your brain pushes you to do it again. Both roads lead to the same place, trading outside your plan. That's why the most dangerous moment for any trader isn't when they lose money, but when emotion spikes, good or bad. Because in that moment, your mind stops analyzing the market and starts negotiating with it. Imagine you've been losing all morning. You're frustrated. You see a setup that's not quite right, but you convince yourself it's close enough. That's pure self-sabotage. Not because the trade fails, but because you've just taught your brain to ignore your own rules. Next time it'll be easier. And after that, automatic. You've built a habit of self-destruction. Or maybe you just had your biggest win of the month. You feel untouchable. You take another trade, not because it fits your plan, but because you're riding the thrill. It's the same trap. The emotion changes, but the pattern stays. Your trades are being controlled by you, not the market. The dark side of trading psychology is this. You can understand everything and still repeat the mistake. Self-sabotage isn't born from not knowing. It comes from the gap between what you know and what you do. And the wider that gap gets, the more dangerous you become to yourself. Why does this gap exist? Because your brain doesn't run on a single layer. There's the conscious mind, the part that knows your plan, your limits, your logic. And then there's the unconscious mind, the one that carries your fears, doubts, and hidden urges. When the unconscious mind wants something, to recover a loss, to prove a point, or to feel in control, it overrides the conscious mind without asking. And here's what most traders never see. The unconscious mind speaks through feelings, not logic. That means you can be fully convinced you're making a logical move, when in truth, you're just justifying an emotion. That's why traders repeat the same errors, even after promising never to do it again. They're trying to fix a mindset problem with logic. They add new indicators, tweak strategies, set tighter stops. But until they face the emotion behind it, self-sabotage keeps returning in new forms. Think about it. How many times have you caught yourself making the same mistake and saying, I know better than this? That's your conscious mind speaking, realizing too late that your unconscious was already in charge. Self-sabotage also thrives on identity. If deep down you don't truly believe that you're capable of being disciplined and profitable, you'll subconsciously behave in ways that prove that belief right. If you see yourself as someone who always slips at the end, your brain will make sure that story keeps playing out. This isn't fate or magic. It's the law of self-consistency. Humans hate to act against their self-image, even when that self-image is damaging. And that's where the downward spiral begins. A trader takes one emotional trade. That trade strengthens a harmful belief inside them. That belief increases the chance they'll repeat the same mistake. Eventually, this becomes their default state, not because the market defeated them, but because they conditioned themselves to fail. The cruelest part is that self-sabotage stays invisible until you take a step back and see the bigger picture. In the moment, every action feels justified. Each trade feels like the right choice. But when you look at your past 50 trades and realize most losses came from breaking your own rules, you'll see the truth. The real enemy was always you. So, how do you end this pattern? The first key is awareness, but that's only the beginning. It's not enough to just notice your behavior. You must retrain your mind's habits. That means interrupting the cycle the instant emotions rise. It means walking away, even when every part of you wants to act. It's proving to your subconscious that you can go against your impulses. And here's the tough truth. Most traders never do it. Not because it's impossible, but because it asks them to give up the part of trading they secretly crave. The thrill, the adrenaline, the illusion of being in control. If trading has been your escape from boredom, pressure, or insecurity, then fixing your mindset will feel like removing the fun. And many would rather lose money than lose that feeling. That's why most traders stay trapped forever. They aren't fighting the market. They're addicted to the game that keeps defeating them. Most traders think the opponent is the market itself. They blame the sudden spike, the unexpected news, the fake breakout, the candle that defies logic and wipes them out. They think the sabotage is external, beyond their reach. But the truth is much colder. The real enemy doesn't live on your chart. It lives in your head. It quietly influences your every move, every doubt, every burst of confidence. Self-sabotage isn't loud or sudden. It's not lightning you see coming. It's rust forming silently. You don't notice it at first, but over time, it weakens everything. In trading, that rust is your subconscious belief system. You can master every pattern and strategy. But if deep down you believe you don't deserve to win, you'll unknowingly create ways to lose. It's rarely clear in the heat of the moment. You skip an entry that was plain as day, and instead of letting it go, you jump into the next candle that moves, just so you don't feel left out. You shift your stop loss, pretending you're giving the trade space to breathe, when deep down, you're just avoiding the sting of being wrong. You lock in profits too early because you fear the market might snatch them back, even though your plan clearly told you to stay in. Those actions feel smart at the time. They seem like tiny tweaks, but in truth, they're quiet betrayals. Betrayals of your own system, your own discipline, your own intuition. And the hardest part is these slips don't happen in one big blow. They sneak in quietly, a stop-loss move here, an early exit there, a little more risk, just this once, until one day, you stare at your account and realize you've erased weeks of growth in hours. The tricky thing about self-sabotage is that it often wears the mask of protection. Your brain isn't out to destroy you. It's trying to keep you safe. But what your brain calls safe rarely matches your goals. The mind only values survival, not achievement. And to survive, it prefers the comfort of the known. If you've spent years losing or barely breaking even, your brain quietly labels that as your normal. That becomes your comfort zone. It's not pleasant, but it's predictable. And predictability is what the mind craves most. That's why the moment you start breaking that cycle, when you finally build real momentum, your brain sends you warning signals to pull you back. Doubts, overthinking, sudden strategy shifts, reckless trades that seem to come out of nowhere. It's like climbing a mountain and feeling a strange pull to go back down, even though you can see the summit right ahead. Your brain doesn't care about the beautiful view from the top. It just knows you've never been there before. And to your instincts, new ground always feels dangerous. Here's the uncommon reality. Most traders don't sabotage themselves when they're losing. They do it when they start winning. Losing traders don't blow up because they can't take a loss. They blow up because they can't handle victory. It's easy to overlook how uncomfortable success can feel when it doesn't match the image you've built of yourself. If your identity has been shaped around being almost there, but never quite making it, then steady profits start to feel alien, even undeserved. And when something feels undeserved, you subconsciously find a way to lose it. That's when traders start breaking their own rules. Over-leveraging, ignoring stops, taking random trades out of boredom, or switching to new setups just to destroy what they've built. It's a hidden defense mechanism. You see a larger balance than ever before, and instead of feeling secure, you feel tense, almost fearful. It's like holding something delicate and precious. You're terrified you might drop it. That fear pushes you into over-control, and too much control leads to interference. You close trades too early. You widen stops for no reason. You take setups you'd never have touched before. All because part of you fears the market will reclaim what you've earned. The irony is, it's not the market taking it away. It's you. The mind also runs another trick, selective memory. After a bad trade, you recall every little mistake. What went wrong, what you should have done, and how to fix it next time. But after a great trade, you dismiss it or call it luck. You downplay your victories because they don't fit the story you've told yourself. If your wins don't become part of who you are, they'll never feel secure. They'll always seem like short-lived accidents. That means your mind will never truly back you in keeping them. The only way to end this pattern is to redefine what normal means to you. And that's tougher than any technical lesson you'll ever learn in trading. It's not about reading countless books or watching endless strategy videos. It's about proving to your mind again and again that success isn't a threat, that profits are safe to hold, and being wrong doesn't make you unsafe. You must experience small, consistent wins until they feel as natural as breathing. Only then will your mind stop treating success like a threat. But this mental rewiring doesn't happen overnight. You can't undo years of subconscious habits with a single good trading week. You have to treat it like training a wild animal. At first, it doesn't trust you. Every sudden move feels like danger. The brain works the same way. It resists change. It holds on to old patterns where it still feels in control. So you must stay patient. Keep showing up, follow your plan precisely, and allow both wins and losses to exist without emotional chaos. That's how your brain starts to trust you. The sad truth is, most traders never reach this stage. They keep hunting for the next perfect method, the flawless setup that will finally make trading effortless. They assume self-sabotage only happens to undisciplined traders. They fail to see that it's a built-in human mechanism, one that works against anyone trying to change their financial identity. Even if they discover the best trading system in the world, they'll still find a way to ruin it. Because their real opponent was never the market, it was their own mind. Self-sabotage doesn't mean you're broken. It means your mind is still running an old survival code that no longer fits your goals. The good news is this code can be rewritten. The bad news is it starts by facing the truth. Success will always feel uncomfortable until you make it feel normal. And until then, every breakthrough will drag a hidden force pulling you backward. That isn't the market being cruel. That's your own mind unknowingly protecting you from what you're chasing. Most traders don't realize self-sabotage doesn't always shout. It's not just about blowing an account or revenge trading after a bad loss. Sometimes, self-sabotage is quiet. It hides behind what looks like discipline. It wears the mask of patience. It even pretends to be learning. And because it's subtle, it's far more dangerous than obvious mistakes. When someone takes a big loss, it's visible, and it forces reflection. But when a trader slowly loses their edge without noticing, There's nothing that triggers awareness or alarms. That's the kind of sabotage that turns potential traders into lifelong beginners. The trader feels they're growing, but month after month, the results tell a different story. And because they aren't blowing up their accounts, they think they're doing fine. They're not. They're stuck in a slow death of progress. One of the biggest reasons this happens is mental rehearsal of failure. You think you're preparing for the worst, but you're really programming your brain to expect it. You imagine the trade going wrong before it even begins. You tell yourself you're being careful, but deep down, you've already accepted failure as the outcome. The mind always walks toward what it believes. And when belief is negative, performance follows it downward. Another hidden form of sabotage is comfort in chaos. Some traders unknowingly keep their trading life stressful because a part of them is addicted to the fight. They'll make sudden decisions, shift their strategies halfway through a trade, or jump into new markets without thinking twice. If you ask them why, they'll call it flexibility, but in reality, it's disorder. They've forgotten how to operate in calm, steady situations. They've made the thrill of chaos their comfort zone. So consistency feels dull and dull feels wrong. Then comes the trap of overpreparation. At first glance, it might sound like a good quality, but overpreparing usually comes from fear, not from discipline. It's the endless chase for absolute certainty before entering a trade. Reading another article, waiting for yet another confirmation, tweaking one more indicator, all while the market moves ahead without them. On the outside, it looks like patience. On the inside, it's just avoidance, fear pretending to be hard work. Another hidden cause of self-sabotage is the fear of success itself. For some traders, achieving their goals feels uncomfortable because it shakes their sense of identity. If you've always seen yourself as the one still striving, true consistency can actually cause an inner crisis. Suddenly, you're responsible for maintaining that success, and that weight feels heavy. And if deep down you feel undeserving of it, your mind will quietly find ways to lose it again. It's the mind's way of going back to what feels familiar, even if that familiarity is failure. Another layer of self-sabotage comes from misplaced loyalty. Traders often stay attached to systems, mentors, or groups that no longer serve them because leaving feels like betrayal. They know the strategy doesn't suit them anymore, yet they keep following it out of habit and attachment. Or they keep taking advice from people they trust, even when their own analysis disagrees, because questioning them feels wrong. In the end, that loyalty costs them more than any losing trade ever could. Perhaps the most deceptive form of self-sabotage is protecting your personal story. You build a comforting story about why you haven't succeeded yet. Maybe you tell yourself you're still learning, or waiting for better capital, or perfecting your system. That story shields you from facing the real reasons for your lack of progress. But it also traps you exactly where you are. Because if your story says you're not ready, your behavior will keep proving that true. Changing that story means admitting the old one was just an excuse, and that's never easy. These self-sabotaging habits often work together, feeding on one another. A trader might over-prepare out of fear, then delay action until the chance is gone. Missing that chance gives them another excuse to over-prepare next time. Or they create confusion, make bad trades, and end up believing they just need to try harder. That belief then pushes them into even more chaotic trading. The loop continues until something finally breaks. The solution isn't about more tools or new indicators. It's about brutal honesty with yourself. You need to see how you quietly sabotage your own growth. Self-sabotage doesn't always show up as a dramatic failure. It's often a series of tiny choices you make without even realizing it. Each one slightly off your original plan, each one taking you further from your goal. When you remove all the noise, self-sabotage in trading boils down to one truth. The mind craves what's familiar. And if failure or inconsistency feels familiar, you'll unconsciously recreate it. A trader's true task isn't just learning how to win, it's learning to feel comfortable with success. Because once winning feels natural, sabotage loses its grip. Most traders believe self-sabotage is something they can fix with one piece of advice. They think it's just a bad habit or a few wrong trades they can patch up with discipline. But the truth is self-sabotage isn't in your trading, it's in you. Until you confront that truth, no strategy, no matter how perfect, will save you. The dark side is that your own mind can make you fail without you even realizing it. Sometimes it's not a reckless trade or a blown stop loss. It's following your plan perfectly, but at the wrong time, in the wrong market, or with the wrong size. You'll feel like you're doing everything right, yet your account keeps draining. That's the most dangerous kind, the one disguised as discipline. It happens because your brain is addicted to balance. If you've held the same beliefs about money and success for years, your subconscious will fight to keep them alive. And if even a small part of you believes you're not meant to be rich, your mind will make sure that belief becomes reality. It will take you near to success, but not close enough to remain there. That's why so many traders watch their accounts grow fast, only to see them crash right back down. It's not the market that drags them down. It's their own thinking pulling them back. This baseline effect is quiet but powerful. You might believe you're chasing $10,000 a month, but your inner limit is set at $2,000. Anything above that feels strange, and the subconscious sees strange as unsafe. So it creates errors on purpose. You might take one trade too many, skip a perfect setup, or move your stop loss just a bit too wide. You'll call it bad luck, but it's not. It's mental programming. The harsh truth is, this programming existed long before your trading career even began. It comes from your childhood, from your home, from what you saw and heard growing up. Maybe you watched your parents fight about money. Maybe you were told that rich people are selfish or corrupt. Maybe you learned that whenever you got a little extra, something bad would take it away. Your trading account doesn't delete those beliefs, it amplifies them. Every small price move becomes emotional. Every loss feels like proof that you're not good enough. And every win feels like something terrible is about to follow. To escape this trap, you have to do what most traders never dare. Separate yourself from your results. As long as a loss feels like a personal failure, you'll always be vulnerable to destroying your own success. Because once you start winning, your subconscious feels endangered. If winning defines who you are, then losing destroys your identity. And the mind always protects itself, even if it means leading you back to losing. The irony is that the best traders don't measure their worth by wins or losses. They see the market as a place to follow a process, not to prove their value. That's why they can lose without falling apart. That's why they can keep following their plan even after a losing streak. It's not that they don't feel pain, they've just trained their mind to not take it personally. But here's the mistake most traders make. They try to think positive without changing the roots of their patterns. You can't talk your way out of self-sabotage while living from an old script. You must rewrite that script from the ground up. That starts with spotting the triggers that make you break your plan and removing their control over you. It might mean stepping away from the charts after a big win to stop the overconfidence loop. Or it might mean trading smaller after a loss to train your brain to feel safe again. These aren't quick hacks, they're deep rewiring steps. Self-sabotage also grows stronger when you isolate yourself. When you trade alone, it's easy to justify small rule breaks because nobody's watching you. That's why accountability through a mentor, a trading journal, or a peer is a game changer. Knowing that you'll have to explain your moves forces you to face the patterns you'd normally ignore. It brings your subconscious habits out into the open. The truth is, the market isn't your enemy. It's not hunting your stops or reading your thoughts. The only opponent you face is the part of you that fears success. Once you dismantle that part, everything begins to shift. Suddenly, you're not fighting yourself each time you look at the charts. You're free to simply follow your system. But breaking that inner barrier means accepting you're both the cause and the cure. That's a tough truth because it leaves no one else to blame. You can't point fingers at your broker, the news, or the market chaos anymore. All that's left is the mirror and your decision to stay trapped or break free. Here's the final irony. When you finally beat self-sabotage, trading actually becomes dull. The emotional roller coaster fades away. The highs and lows stop mattering. You stop feeling thrilled every time the market moves your way. And that's exactly when consistency begins. That calm, emotionless state that once felt empty now feels like real control. You're no longer trading to feel something. you're trading to make money. The dark side of trading psychology isn't that it ruins you. It traps you in place. Most traders never even notice it. That's why they stay stuck. But the few who recognize it completely change the game. If you've watched this far, you're already ahead of most traders out there. You've explored the side of trading nobody talks about, the one inside your own head. Now the question is, will you act on it? If this resonated with you, hit subscribe. Every week, we dive deep into the true mental side of trading, the one that decides whether you win or lose. And I'd love to hear from you. What's one habit or pattern in your trading that's holding you back? Share it in the comments. Let's talk about it.